Okay, so I'm going to start with just looking at the dollar. So you can see on this dollar, I've set this on the daily chart, the dollar index. So the largest component of the dollar index is the euro. So I've set this to the high and the low of the 2020 range, created through the demand slump created from the virus. So as the dollar came off, subsequently sold at resistance and actually broke down, so the markets have come up. And that's a typical relationship between the dollar and the markets. Why? Well, one of the reasons is the US has got incredible debt ratio, so it's very, very expensive for the US to service their debt if the dollar is strong. So that stands to reason if the dollar is weak, then that is good for the stock market, because it basically increases liquidity. And it's the same for any central bank. If your home currency is really powering up, that is seriously restrictive to your economy. So the fact that we had this liquidity issue with the virus demand slump and subsequently saw this sell-off, that's one of the reasons why the markets, the US markets in particular, are supported to the upside. So, and here you can see with the fibs, we've got a very, very neat buy signal on this fib support. So if we creep back up, it could at least make some sort of dent in the US market, but it's unlikely to have a significant impact on the US market unless that really starts to climb above 99.25, and of course, you know, the big 100 mark, the big 10 mark up there. So we're low. If the dollar can stay low, if we just consolidate, maybe even close lower, then that could sustain this leg up that we've got in this market. And it's done some really heavy lifting on Friday, and we'll come to that in a minute. Let's just look at the volatility index. So we'll just look at some basics initially. So all I'm going to do in this session is quickly rattle through the indicators, and then I'm going to show you, I've done good 2-3 hours of stock scanning today, and in fact I've had quite a full-on weekend at my screens, just prepping for the week ahead, and I'll just share with you what I have been seeing. So volatility index, so as you can tell from the very name of this chart, if the volatility is low, then that suggests that the current trend is intact, and that so the fact that we've come off of this 30 and we are closing lower, then that suggests that we've got stability in the market. Sometimes if the market goes really flat, this is really problematic for the market, certainly for a day trader. I need volatility. So if this market goes really flat, that creates a problem. It's much harder to make an income out of a flat market. Ideally we need lots and lots of volatility, lots of movement. Anyway, so the basic indicators at the moment are suggesting that this is a market that is going to go higher. So let's look at the tech first. Let's look at the Nasdaq. So the Nasdaq put in a sell signal on Thursday and immediately closed higher, so extremely bullish. And I mean, to close higher when you've got 13–14% unemployment is quite incredible. So now when I saw the sell signal, or when I actually started talking about the sell signal in our alert room, that I wasn't instantly going to charts and going to stocks and selling. All I was doing is tightening up stops and managing any exposure I had in the markets until I got confirmation that this market could be about to reverse. So, you know, I take reversal signals seriously, as any technical trader would, as you'd expect me to do. But of course, you know, non-farm payroll was Friday, so I wasn't going to make any key decisions until we got that non-farm payroll out of the way. So that's a really bullish move. So if we can sustain that high, if we can, as long as we don't engulf that and get a close, if we were to get a close under 96.25 on Monday, well, that completely changes the story again. And that could happen, and that's actually what happened over here. We had a sell signal on the 17th of February, and then we spent the 2 following days closing higher. So my advice to you is to watch, is not to sell the market, but to watch that level very, very closely, and of course to watch the trend line really closely as well. Because if we subsequently close underneath 96.25 and lower, that is obviously doom and gloom, or short-term doom and gloom. Doom and gloom is a bit of a drastic term to use, but that's what we've got to watch for, these levels. And I've left the fibs on this level. What this level is the initial wave to the downside from that 3-wave reversal on the 17th of Feb. Because what we actually saw was, we saw from the 28th of Feb into the 4th of March, we actually got some buy signals. We saw a little pin bar on the Friday the 28th, huge engulfing bar on Monday the 2nd, only to find that they couldn't even get it to 50%. They just narrowly missed touching the 50%. So there were clues in there that we were going to get another leg down. But the most important clue to me was this, because this is how I normally have my daily fibs. On the previous year. And the fibs on the previous year, what did that tell me? That told me that on having missed the 50% signal and closed lower, your basic traffic lights, isn't it? These are all red. Then suddenly you get a couple of really good green bars, and then you go red again. So this is it's turned out to be a bearish consolidation. And if you had held your fibs on the 2019 range, you would have spotted that this bar here didn't hesitate to close underneath the 2019 range. It came right into the minus 127. Closed above 2019 and immediately closed lower. So that's your signal for the next level, which was minus 161. Anyway, where are we now? The most important thing is, where are we now after this big tick up on the daily charts? Well, where we are now in terms of 2019 is at the top of the zone. So that's the outer zone, that's the inner zone. So we didn't close above that. We dropped 300 pips from the session high to the close. So if we now pull back, and ordinarily on a big buyer's bar that we had on Friday, if we can hold about a third of the way back down there, we can hold back into that bar, or at least hold into that support at 26.3, then we could and ultimately close above 27.3, or close above Friday's high, then we could potentially go and fill that gap. So we've got a gap up there at 28,900. So if this really is that bullish, we've got to sustain Friday's range minimum, absolute minimum. And no reason to suggest that we can't at this stage. In fact, I mean, in scanning for stocks, it's actually quite difficult to find good stocks where they look as if they're going to pull back to reasonable levels at the moment. Last week in particular was so bullish that they are sitting at a lot of stocks are sitting quite high. Some stocks are sitting very high. So we'll talk about that in a minute. But I have got a selection that I'm going to share with you. But it's a good run.
Mike, can I say something?
Of course you can.
Hello.
Hello, Jessica. How are you?
I'm fine, thank you. How are you?
I'm good. I'm fine.
Good. Hello, everyone. Just a few comments about this this move on Friday, because firstly, I read a piece today that was saying that there was an amendment to the figures that they'd released.
Right.
That they actually said that that they were counting people who that the unemployment rate hadn't been calculated correctly, because there were some employers were putting people who were temporarily unemployed, they were ticking a box that said other.
Right.
And evidently this accounts a few million people. So a lot of people on Twitter have been saying this is rubbish, this claim that the unemployment, and they're even blaming Trump for saying that he's actually manufactured this statistic.
Right.
So I do think that there will probably be a sense of sense of questioning, if a lot of that seemed to be caused by the non-farm payroll, and I think there will be a sense of questioning tomorrow. And probably, the rally was not, because it appears on that unemployment chart, if you look at that chart that is waving all over Twitter, that the unemployment, has gone down in a beautiful shaped V and has come straight back up again. Sorry, employment levels have gone down and come straight back up again, and people are saying it's absolute rubbish. So I do think there's going to be a question mark.
I was listening to Bloomberg and looking at some of the sort of overviews of that data, and as soon as it came out, they were saying that there was a disproportionately higher number of temporary workers included in that so-called glossy number. So yeah. I was very sceptical of it as well, and I wasn't at all surprised to see a 300 pip drop from the high.
And I think the second thing is that a lot of the buying that went on Friday was evidently hedge funds who were covering shorts. So, they were hedge funds. Evidently, 70% of hedge funds were shorting on Thursday. Or, there was
it was an incredible figure. I have to say,
there was a lot of shorting going on. So hedge funds who invest squillions of pounds into analysing the market were all shorting, and suddenly the market moved against them, so they all had to get out of their shorts and buy, which seemed to be quite a lot of that push. I think it's just ringing a warning bell that with so many hedge funds who have got more money than we can imagine, more resources go into this, they're all shorting. It just means it feels like this is getting a bit toppy and that it's ready to come down a bit.
As a general rule of thumb, if I'm scanning for stocks and I can't find an entry, I tend to find that's because there isn't an entry, and stocks are, what I'm saying is stocks are potentially really overextended here.
Yes.
And we are due a pullback, because it's really, really tough scanning to find something, a good quality stock that you can buy at a reasonable price.
Yeah, and I mean, for example, one of the big movers on Friday was American Airlines, which I think went up 20%.
Yeah.
But American Airlines had just announced that they were going to fly, I think, 50% of their routes or something. But that announcement had been made 2 weeks ago, and it was just like, I think what they're saying is retail investors seem to be pushing this on Friday. It was a lot of retail investors that were suddenly bombing into the market and
There
going.
have been incredible inflows into funds from the retail side coming into these markets. So these fund managers have been forced to stuff it in the market, I think.
Yeah, and I'm just wondering whether it's almost like a stop running thing that's going on, that that there will be. I mean, I'm wondering if people are still going to be shorting higher up.
Well, I tell you what, I mean, the thing that strikes me about this Dow is it's full of industrials, which have been lagging. It's taken this is way out of kilt with the Nasdaq, which that's not unusual anyway, particularly given the circumstances we've had. But the thing that really strikes me on a technical level is the fact that, and this is a great short zone for me. If you've had a dramatic drop, one of the things that surprised me in this leg up here was, I thought we'd get a higher leg up in March, and we didn't even touch 50% on that March level. So that showed, that exaggerated the weakness that we had up there. But what I'm saying is, I mean, all we've done is come into a short zone for me.
Okay. So
yeah, if you get a horrendous, and I think the one of the things that struck me is where if you are in a potentially very bearish market, the bull rallies in a bear market are traditionally much more aggressive than bull markets anyway. It sounds a sort of a contradiction in terms, but bull market rallies in bear markets are always significantly higher and more aggressive, because you can get situations where institutions are on the wrong side of it and have to cover their positions quickly, which over exaggerates the market. But I mean, on pure technical levels, for a market to sell to this extent and to come back into just a high fib zone is potentially great for bears and bear raiders like me.
Yeah, and also when you said, I think you said before, if you look at 2008, that what happened in the 2008 recession was exactly, we went kind of up and down, didn't we?
Yeah, I mean the 0708 seems like a walk in the park compared with this. An absolute walk in the park. If we go back to that, and yet, you know what? In many respects, 0708 was far worse than what we've had here.
Yes.
Because we had this global vacuum in derivatives, which is, I mean, if you've got derivatives by their very nature, you're talking about leverage. So we had an incredible vacuum in a leveraged market, and yet we're nowhere near as drastic in 0708 as we appear to have been in this demand slump of 2020. So yeah, this is this, to my point, coming back to my point about bull rallies in bear markets. We had huge lifts up here in March 08. How we managed to get so high in 08, given what we were experiencing, I do not know. But hey, that's just technical trading for you.
Yeah, there's a few people saying, I mean, the piece I read on hedge funds was saying that a lot of them seem to suggest that we haven't had the lowest lows of the year yet. And this is why so much shorting was going on. But I think they all got caught out on Friday when the market completely turned against them to such a large degree. So maybe short term the rally will continue, but because all the market signals are suggesting it's a bull market, aren't they? They're all suggesting buy.
They are, apart from the fact that it's difficult to find good stock to buy anymore. And we'll look at some bellwether stocks in a minute. Okay. But just to come back to this point about how bull market, how you can have bull runs in bearish markets. Yeah, it's got, I guess this rally we've had is the benefit of 3.3 trillion and the promise of Mr. Powell opening his wallet a lot more in the near term. But
well, it is, but also a lot of analysts are saying that the market in Germany and Europe is a completely different type of bull. It feels it is completely different what's going on in Europe. So Europe is recovering from a lower base, but actually the structure of the shift upwards in Europe last week was based on people actually buying long, whereas the structure of the shift up in the US market was people selling short position, or people coming out of short positions far more than people buying long. So it was really the hedge funds and the institutions being wrong-footed on Friday that caused.
Yeah, I guess if you, well, I would split that, and because in terms of what I'm seeing in a lot of UK stocks, the levels of the indices we've seen have been justified by the extent to which stocks have bounced, not just bounced, but broken previous highs. So the stock prices were supporting the indices high, but yeah, the short covering. This is the problem with bear markets. If you get a short covering bounce, it can be very, very aggressive. This is more of a. It's interesting looking at the weekly chart in the Dow in 08, because here we are with the initial push lower from 07 to January 08, and the bounce from January 08 into May, sell in May and go away. Well, this was classic. All of that pink zone is just the high of the inner fib zone, which is what you expect. So in the initial 2020 drop, we had less than 50%. So the initial drop on the final 2 legs down out of a 5-way move came from a much lower level than we achieved in the drastic situation in 07, 08.
So actually, the current thing, we may be in stage 2 of a 5-way move. Oh, gosh.
Yeah, well, let's look at that. Let's count the waves. Let's go to the waves.
My God, you need to look at that. And if it goes lower than those previous lows, then we are in stage 2 of the 5-year, aren't we?
Yeah, well, let's have a look at the daily. Because so here we've clearly got, to me, let's get rid of, let's make this naked for a bit. So you've got a 1, 2, 3, 4, 5 into the lows, and then you get a 1, 2, 3 wave correction. Now ordinarily what you would normally do is, and this normally works extremely well, but it's not done in this case, what you normally do is fib that, and you take it, you drop the fibs down to the end of the C wave, which is here, and then you'd normally expect that 24,375 to fail and start coming back to 21,700. Well, that just didn't happen.
But that's a lot to do with liquidity, isn't it? Because
yeah,
the fact that they're pumping so much money in, they're distorting the markets.
Yeah, I mean, one of the reasons, or the main reason why the US has rebounded far greater than any parts of Europe is because the Fed have been far more aggressive.
Yeah,
Simple as that. They printed more money. So yeah. Interestingly enough, this picks up on 27,458,
which I suppose is an argument to say that it's not going to go down to lower lows because the Fed is going to print. Well, is it going to print even more, or are they running out of?
Well, I posted in the chat room the global debt ratios, GDP to debt ratios, and US sits up there at the top with 106% to GDP.
Wow.
I mean, if you ever have you ever seen that debt clock, US debt clock?
No.
It ticks away at a frightening rate, and it's somebody posted it, started posting it years ago.
Well, he's asking, isn't Japan higher than the US?
No, it's not. According to the chart I was looking at, let me just. It's going to take me a while to go and grab it, I think. I've forgotten where it is now.
Even so, I mean, the fact is, if you look at, if we go on, have you done the Nasdaq? If you put the Nasdaq up, the Nasdaq, just on a basic support and resistance, it's now at previous resistance levels, isn't it? It's just touching, but it's just broken through them.
I've just found that chart. Hang on a second. Yeah, so we've got this is sovereign debt to GDP, and US is 106.9%.
Japan's off the scale at 230.
Oh, sorry, Japan is higher. Yeah, 238. Sorry, yep, you're quite right. Yeah, and the reason for that is their deflationary cycle. That's why they've had to print so much more money, because of the deflationary.
The US is doing what the Japanese did 30 years ago, entering that kind of cycle. It is, isn't it?
Yes. Yeah. So, and what happened to the Japan 30 years ago? They entered this incredible deflationary cycle where they went through 11 finance ministers in something ridiculous like 5 years, and eventually Shinzo came along and just decided to continue to pump more money in.
Looking at that, it's quite interesting that the UK isn't as low as the others, actually.
No, that's one of the reasons why I think the pound has stayed pretty high, considering what the UK is going through.
Yeah, I mean, look at France and.
Austerity works, doesn't it? At least on a fiscal level. I'm not saying I approve of it. I'm just saying it does work to keep the balance, doesn't it?
The issue is and here's the crux: if the confidence in the dollar fails, and particularly China bails out on their T-notes, boy, does that create a fantastic liquidity issue. Because all that's propped this market up is overseas buying of US bonds and sustaining the debt levels. So if confidence fails in the dollar, in the US dollar, and these bond markets go crazy, then that's a completely different scenario.
But people have been going into the dollar as a safe haven. Is that what you mean? That's why they've been buying
yeah, but they have been going into that. That's one of the key factors in the swift drop in February was the dollar.
Because everyone piled into the dollar as a safe haven.
Well, not just because it was a safe haven, because there was a massive liquidity problem in ETFs and other funds, and they quickly had to cover their positions when people were taking money out of ETFs and so on.
Oh.
So it's a liquidity issue, and so if there's a severe jolt of liquidity in the dollar again, hence the reason why I started off with the dollar, chart of the dollar. If that, let me go back to it now. That's a buy signal. There's the outer range. There's the inner range. So we've got a buy signal, a potential pin bar buy signal on the lower of the range. So if that continues to climb, that's not a trend line. That's a random line. That's not a trend line.
If
Let's
do you
have a
mean
look.
if it start, do you mean if it starts to climb?
If the dollar index starts to climb,
Yeah.
there you are, there's the support. So that's not to say that dollar's going to climb up, because the euro's done really, really well. The euro's had a big leg up this week.
But that's to do with the but that's to do with the, I mean, in very simple terms, America has been the big, a lot of the stocks that have been leading the surge in the Nasdaq and the Dow are that the Amazon, Apple,
Yeah.
you know, the typical, the ones we talked about a lot. Those are now reaching their all-time high, and just from a complete basic perspective, if those stocks are at their all-time high, surely people are going to be questioning, hang on a minute, like you're saying, you can't find an entry point into them, and other people are going to, just logic dictates, in this world where everything is still hell in a handcart, why on earth would we be paying the highest price you've ever paid for those stocks? Whereas in Europe, there's still quite a lot of bargains to be had in terms of German industrials, and now they've pumped all that liquidity into the market. I think that I've seen quite a lot of commentators saying Europe is the place to be at the moment, more than the US. The DAX we've looked at quite a lot, hasn't it? And the DAX has been having a good old run. More than actually the Dow has actually.
Yeah, I mean, these are some of the US bellwethers. So that's Goldman Sachs, has not gap filled yet, and has rejected that upper zone. But we've got Apple sitting up really, really high.
Apple's at an all-time high, isn't it?
Yeah, yeah. So 325 is now support.
But there was a sell signal, wasn't there, on Thursday for Apple?
Yes, there was. Yeah. Low engulfing bar, and then hey, then we get Friday.
But this is what I'm saying, that Friday was mainly to do with that data on non-farm payroll, wasn't it?
Yeah.
It was just a one-factor push.
So I mean, okay, let's go back to the Dow. Let's just look at what's potentially going to happen with the Dow. So, okay, if you look at this, is the fib range on the 2020 high and low, and here on the 2020 high and low, we've closed above that range there. So I think, as with last week, I think the trick's going to be just to wait and see where the Monday close is, because we said that this time last week. That's exactly what we were saying, isn't it? And here we get. And this time last week, we had a close off of that fib support. It ground higher Tuesday, Wednesday, did nothing on Thursday, and then went crazy on Friday. So I think, as with last week, I think even if we close under 26.6, 26.5, 26.6, that's potentially going to show. So I think, but at the very least, this Dow needs a breather.
Yeah.
At the very least, it's really, really hard to find stocks. Stocks are very expensive. The pullbacks have been really, really shallow, and it's very hard to get in. So you would have thought, here we are in, the second week in June. It stands to reason that, to me, that you need a pullback, because everything's so extended.
The problem is, if you get a pullback to say 23.5, which I mean seems to be that's about the next stop down, would you say, or would you say coming down to
23.5? 23.5 is all the way down here under the 50%.
Yeah, but if you look at the resistance, you've got a lot of resistance at 23.5.
Yeah, I always find that was a really good buy signal. The 14th of, let's talk on pure technicals for a moment. Okay, we'll look at the volume as well. Let's just look at pure technicals. So we did come up on volume. I did check that last week anyway. The volume was really slackening off. One of my arguments for shorting at various stages was the fact that the volume was slackening off. So we were at this point here. we were, in fact, the volume was pretty poor until we got to Thursday, Friday. There was a big surge in the close on Thursday. Thursday was rubbish, and they came in about 30 minutes before, a lot of volume came in 30 minutes before the market shut. So anyway, the point I was going to make is this. Where you have a decent buy signal like that, I find, particularly we had a big push up on the Monday the 18th. I find normally the big buy signal like that's what's going to get retested. So that buy signal triggered at 23,640. So if we do start selling, I can see us getting to 26,340 pretty quick.
Well, I'm saying I said 23.5. I mean,
yeah, you did. You're right.
Then I think, but then the thing that worries me is that if we pull back from 27 to 23, 23.5, that actually we're going to end up into quite a bear rally, aren't we? Because I think that people will then start to think, hang on, we're going to go down to 18,000 any minute now. Do you see what I'm saying? It's
yeah.
We'll be there, and people will suddenly think, wow, this is we're going back to early March, and so there'll be a lot more selling going on. So I think even that's enough of a big move to actually justify to really pull the market back down.
Yeah. I mean, one of the reversal signals I look for is a
What are you saying? What do you mean? Well, it's hubris.
I mean, during the period in which we have been set at home and there's been limited economic activity, the market has rallied in ways that doesn't make any sense, does it? I mean,
no, it doesn't. No,
it shouldn't. They're not necessarily connected, but there should be some correlation, and that doesn't make any. So they're trying to rally into a touchdown when the lockdown ends, but I think people are going to realise that it's going to fall short of that. There's still there's still 8 months or 6-7 months of the year left to go, and we still haven't seen what the economic uptick's going to be. All we know is the whole world is in this situation, but the United States figures, to my eyes, don't make any sense.
There's one thing I'm sure you've heard many, many times in the past, but one thing that's always resonated with me from a very early age in technical trading and that is the market can stay irrational for as long as you can stay solvent.
Yeah.
And what we got here was here's the trend line, and we busted it up against the trend line. So if we pop back underneath that, here we go, 26.6 again. This number keeps cropping up in my analysis, 26.6. If we close underneath, it's common. I find it's common for markets to pop above trend lines, but if they pop back in, then just get short. Let's keep it to pure technicals. Otherwise, we're just guessing and speculating.
I still think that you've got to look at what other key players in the market are doing, what the institutions are doing, and when it's being reported that hedge funds are going short, that should begin to worry people, because hedge funds are usually, they usually got the resource to be able to work out what's going on.
Yeah. Well, I tell you what, you put it this way: if you're in charge, if you're a head strategist at a hedge fund, and you're managing X number of billion, what are you going to do faced with a chart like that and stocks sitting so high? Surely you're going to take profits.
Yes, if you've got, I think so. I think that's
surely.
I think so.
From the pure point of view that here we are the first week in June, and I say that because cyclically this is where you'd expect weakness anyway. I know this isn't a typical year, but typically you would expect weakness coming into this period, particularly as we're now, the last earnings season's out of the way, and we're heading towards the next season. Next season, what's going to be in the next season? Next season is going to be the whole of the 8-week, 10-week lockdown.
Yeah. Well, Mike, can you bring up the Nasdaq? Because I'm thinking the Nasdaq has got even less. I mean, where's that got to go? Where can that possibly go apart from downwards?
Well, yeah, if I mean a sell, sell signal to me will be a close under 96.25.
Well, we had a sell signal, of course. We had a sell signal, and then we ignored it, didn't we?
Yeah, well, that happens. Yeah, we had a sell signal here on the 24th of Jan, and then on the
we had quite a big pullback as well on the May the 6th, was it? That was quite a big pullback there.
May 6th, yeah.
And then it was followed by a sell signal, wasn't it?
Yeah.
A lower close. So
I think I've got a funnel pattern here. Let me just update the funnel pattern now. So we're literally just, okay, we're narrowly closed above the funnel. Let me just draw that accurately. So here's the funnel pattern. These lows here from 4th of May and the 27th of May have held. We would just narrowly close on the top of the channel there. But yeah, I just stand by what I said. I'm not a close under 97.55 should ring alarm bells. A close under Friday's open 96.35 should get you short. Simple as that.
Well, I think it's coming. I mean, the thing is, just again, from a really basic perspective, we've got resistance at 97.50, haven't we?
Yeah.
I mean, there's resistance there, so we'd expect, because looking at a longer term, can we go back a bit further? I believe this is the highest level we've had, isn't it?
Yeah, it's a new high. I'll come to your question in a minute, Mazine.
So, and just from a very, as you've said, from a very basic perspective, why in this market where you've got massively high unemployment, you've got planes that aren't even flying yet, why are we pushing these stocks up to these eye-watering highs?
And just for a moment, let's just turn to indicators. One thing we haven't talked in all this conversation is indicators. And look at this MACD. I love the MACD. I'm not a fan of indicators, but I do pay attention to what the MACD does. And look, we're even under the midline. This is the daily MACD, and we're even under the midline on the MACD histogram. That is incredibly divergent. Here we made a new high, and we're under the midline of the MACD, and that's nuts.
Well, I think also a lot of, and a piece I read was saying a lot of stocks are moving into being oversold on their stochastics.
Yeah.
So that again implies that the technicals are going to start pumping them down again. The algorithms are going to start pumping them down. Yeah,
because if they catch, as you know only too well, algorithms like confusion and change, and so if they sense this volume coming off and sense levels failing, that would really, we could see potentially quite a swift move down. But the other thing, another sort of common saying that I have to stick to because I think it's relevant is expect the unexpected.
Yeah.
You've got to expect the unexpected because these markets aren't rational. If you try and think the rationality into a market, there isn't rationality. That's the whole point. The markets are random. So all you can do is, as technical traders, is adhere to the technical signals. And at the moment, the market is telling us it's got further to go. Any market that makes a new high, as long as it sustains that high, is going to go higher.
Yeah.
So it's no point in us sitting here saying, oh, it's all overbought and oh, it's all going to come tumbling down. All we can do is, as technical traders, is wait to see what the close is on Monday, and as I said, any significant close around. Typically, this is what I'd love to do anyway. It's like in oil in invents. Every Wednesday when invents come out, I isolate the intraday range on invents, and last week that was fantastic. Typical with any week. You can just zone the invents range, and you can trade it for the rest of the week. And that's what I do with a big monthly data bar like this. I'd happily sit there with a zone on this Friday non-farm payroll, because whatever happens to that zone on any indice, European and American, whatever happens in this zone is going to dictate the coming weeks and maybe months. So we can strip off these other zones and just sit there and see what happens to this non-farm payroll zone.
Yeah. Can we have a look at Europe? Because I do think Europe is a completely different story, the DAX and these Euro stocks.
Well, yeah, this is what my DAX is showing. My DAX is showing that we've come into a major resistance zone. Yeah, it's had a good squeeze. I guess the only thing in its favour is it's above. There's the outer zone. There's the inner zone, and we're punched above. And that's lifted. You could argue that, as you've been saying, Jessica, that's lifted higher than the Dow, because the Dow hasn't done that. The Dow has only gone up to the top of that pink zone.
But it had a sell signal on Thursday, didn't it? Again, and then
it had a pause. That's not a sell signal for me. That's a pause.
Isn't that a pin bar sell?
No, not to me.
Okay.
Pin bar to me has to fulfill one of two criteria. It has to be at the top of a run, not inside a run.
But it was on Thursday.
It was inside a run. Now, it has to sit. Let me show you an example. Or it has to engulf. So it certainly didn't engulf.
It didn't engulf, no.
It did sit inside of a fib resistance, but let me show you what I would call a sell signal. I can't think of a stock that's done it recently. Let me go back. You've got to have a pin bar at the end of a run, not sitting inside a run. That's sort of more what I'm thinking about. That's at the top of a run, not in. No, that's not a good example either, really.
Close lower. It has closed lower. Yeah.
Yeah, it's closed lower, but okay, I can't find one at the moment.
But we think it's
But that's a major resistance zone. It's not a fib zone; it's a resistance zone.
I think it's probably to do with the structure of what's in the DAX compared to what's in the Dow.
Yeah.
And also, it's on the back of a lot of the European Central Bank pumping a lot of liquidity into the market, rather than the non-farm payroll. That's a key factor?
So, sorry, I didn't concentrate on the second half of your sentence. What
no, I think that the reason that it's gone up so much is on the back of new liquidity coming in from ECB.
Yes.
Rather than the US, which is looking at a statistic which is even questionable in the non-farms payroll.
Yeah. The thing that has always alarmed me about this market is I think the scope of these central banks to continue the support they're promising is actually very, very limited. And I don't think the Joe Public, or as with 0708, Joe Public had no idea how close we came to a major financial calamity.
Yeah.
I mean, in 0708, there were brokers in Wall Street walking to ATMs, emptying their accounts at one stage because they thought, with Lehman's going and everything else, that the whole system was going to collapse.
Yeah.
And yet here we are, as Walid said, and we all been talking about, we've had this massive shutdown where everybody sat at home or went in the garden and got a trowel and started planting tomatoes. And yet we're sitting at new all-time highs in the Nasdaq. So yeah, stands to read. The logic says that we shouldn't be this high, or at the very least we should start selling. So, but
I suppose the only thing to support it is the fact that companies like Amazon, you know, they're the one company that seems to have just been trundling on all the way through the lockdown with no interruption to service. Everything has pretty much come the next day.
Yeah.
So they've shown that they can adapt to a massive surge in demand. And I suppose people like Zoom. I mean, Zoom's price shocked everybody last week, didn't it?
Yeah.
So I think that people are realizing what you can do on Zoom, what you can do on Amazon. Are we going to go back from that? I think maybe that's the only justifiable reason that you could be at an all-time high on those stocks. But I mean, Boeing makes no sense, does it? Not a single.
No, it doesn't. What's interesting about Boeing is it's come up on volume. Had that volume have stayed underneath the 31 million, I would have been quite alarmed. But it's not. It's shot up to 64 million in volume.
Look at American Airlines, Mike. That's got
yeah.
That went crazy.
Yeah.
It's almost the same chart. Oh my gosh! Yeah,
but what's significant is it didn't hold, did it?
No.
We had a higher of 22.85, but we didn't hold.
No, but look at how much it went up. It went up from, what was it, 13 in 2 days?
Yeah, I mean, on Wednesday we were at 11.8, and we went up to 20, well, close to 23.
Whoa!
So, you know, brilliant if you're in it.
Yeah.
Well, your IAG's done really well, hasn't it? I claimed it was going to hit 212, and it didn't. I'd set alarm for 212.
I haven't been following IAG, but 327. My gosh, yeah.
And even your bloody Carnival.
Have you seen TUI? TUI's gone.
Yeah.
Crazy. Yeah. What's Carnival on? 1431. Goodness.
So the pink zone held. We've got a gap down there. We've not filled a gap. No, you couldn't. No, probably had just about filled a gap. So interesting. Yeah.
Let's look at EasyJet.
EasyJet. Yeah. So I just go on to a few other things that I've got in mind as well. Let's get on. Let's move. Let's cross some more. Just
whistle through these. I think they're all just sitting up, aren't they? Oh my God! Look at that.
That's hit 50%. Look at that, right at the high. It's 50, a gap fill and 50%.
891. But again, I mean, this makes no sense whatsoever. Look at IAG. That there's this quarantine. They refused to go to a meeting with Priti Patel. They went off in assault because she said, "We're not going to we're not even prepared to discuss the quarantine with you."
Mm.
And IAG went off in a sulk and said, "Okay, well, we probably won't fly anything," and suddenly their share price has gone up to 327.
Yeah,
that makes no sense whatsoever, does it?
No, it doesn't in terms of rational pricing. But what does make sense to me is the way in which the floats work in brokers' hands. In other words, if you've got a market where too many people are short and liquidity drops, and you get a surge on the upside. This is why bull runs in bear markets are so aggressive. And I think.
You're saying that they're all a short squeeze? Mark?
Yeah, I'm saying they're a short squeeze.
So all of these stocks that we've just been talking about.
That has got to be a part of this. Yeah, definitely. Yeah, but look at that chart. That is the bearish chart you'll ever see. It just falls out. This is a major airline. It just literally falls out of the sky. Pardon the pun. And so everybody's trying to short highs up here, and it works. It drops. It gets even shorter. But then
that's when the quarantine was announced. When it went down to 180.
Yeah.
That was when the quarantine was announced, and they were wobbling their way up. They got up to 250, didn't they? And then they just went down to 180. And then since then, I mean, they came back down. It came down to 230, didn't it? But suddenly it's gone from 230 to 327 in 5 days.
Can I just ask, actually, does British Airways have the right to fly from primary bases in Spain and elsewhere where IAG are based?
Where's that open?
Europe has relaxed its flying rules, isn't it? So maybe it doesn't make that much of an impact because BA will start flying again.
Yeah, but then no, I think BA, I mean, their July schedule is hardly anything. I think what this
in the UK, I mean, because like Air France and Dutch airlines are linked. It's a similar arrangement, isn't it, between BA and Iberia and some of those?
Well, yeah, but BA's core market is London to somewhere.
But could it shift from Barcelona to somewhere? That it's just a question. I'm not saying that's right.
I mean, it's not going to, because all of its customers book with British Airways to get to London, and the problem is when you get to London, you've got to quarantine for 14 days. I think.
But that's my point. Is that they would shift operations and it would still be BA.
I think they might do. That would take them such a long time to do, Walid. I think what we're looking at here is just almost a blind pile-on into these markets by, I suspect, retail investors, Mike. Do you think? I mean, or are we looking at institutions buying? You've got a lot of volume there, haven't you?
I think you're looking at. I come back to liquidity, Bob. You're looking at a situation where. Let me just get my pen.
Is this a short cover? I mean, are these short covers? Do you think?
Yeah, I think it's short covering. I mean, and that justifies the volume. That sort of explains the volume, because I mean, look how the volume on the downside here is actually not too drastic in the whole scope of things. There's a drastic short volume.
That was when the quarantine came in.
Yeah. So yeah, you've got all this huge. Look at all the red bars down there. So the bucket's empty. So all these guys are sitting. All these shares have been sold.
Yeah.
So there's no liquidity. So if you're the market maker sitting there with an empty bucket, you're not going to make any money, and you can't move the stock. So you've got to clear up the liquidity, get these shorts to fill the buckets again, to get liquidity back in the stock. So this is why you get sharp short bull market rallies in a hellishly bear market.
But also we're looking at this hedge fund thing again in institutions who were shorting at, say, 250, something like that, who were shorting expecting us to pull back to 220, and actually the market moved against them, so they all had to short cover, and that's pushed us up to 327. Do you think, or is it on the back of American Airlines? I mean, American Airlines and Carnival shot up on Friday, and maybe everybody in the States was just buying any old airline they could get their hands on, because I think all airlines told the same story. EasyJet, Southwest Airlines, all of them seem to rise on the back of American.
Yeah. I think there's several things coming into play, but the bottom line is, I mean, you know what? You don't even need to know what. You don't even need to know why that's going up. There's a squeeze pattern. So we looked as if the squeeze was going to break up on the 21st. We hesitated on the 22nd, and would you believe it? On the Monday they gap it up and keep going. Monday the 26th of May. So I mean, technically, bringing you all back to my point about what the market makers are doing, and what the market makers are facing, i.e., a liquidity problem in the stock. Yeah, as soon as that gaps up on the 26th, yeah, everybody's doing their best to cover their position and get out with the least amount of loss.
Yeah. Yeah.
And of course, the more that happens, the higher the price. So it's a bear market rally. because you can't rationally explain it. We all, you know, we all know there's no planes in the air. We all know they're reducing their workforce as hard as they possibly think they can allow.
And also there's something, there's quite a lot in the press about them today that I think the unions have said it's dismissal, it's not redundancy, and they're going to challenge all these redundancies they want to make. So they're coming.
Yeah, I mean, just okay. So the technicals have illustrated that breakout. So in terms of if this is going to be bearish, what would you do? How would you handle that stock? Well, you would either look for an engulfing bar, a close under 305. At the moment, this looks as if that could do 357 at the moment. Because, I mean, think of it, in terms of a pullback, ordinarily I would short, I would look for a fib zone to short. But we're gapped up, and the next fib zone up there is 357. So this could still go higher.
Yeah.
So again, that's the non-farm payroll 5th of June range. It's what I would class that as an island candle. Whichever way we close outside of that island is at least going to give you a short-term move, if not a longer-term move. Yeah. But ultimately, I mean, all the news aside, all the fundamentals, all the news, all the whole sort of quarantine issue, etc., that's still got more to go.
Well, I suppose also, if you're just looking at it logically, if they are flying 50% of their route, I mean, I think the way that you can justify some of this is saying you had a company that was worth just under 700 a share. Well, it was, where were we in January?
It was 685 at the high.
Okay, so we've got a company that used to be worth 685. We've got a company that was incredibly profitable. COVID is the only reason that has dropped. COVID is coming to an end, and therefore going up to at least 50% of its previous level doesn't seem to be over-egging, does it? I mean, there's that.
No. I mean, the major technical resistance is all the way up there at 425. Oops.
Yeah. Yeah, well, but nobody's had a second wave thus far, have they? I mean, no, not a profound second wave.
No.
There kind of talks of a second wave, but thus far, and the market is pricing in the fact that there may not be second waves.
No, but that's what I mean. I mean, you're right. But if there is, as there usually is with these infections, then it's going to drop, isn't it?
Yeah, but as I keep saying, there's no technical reason to sell that at the moment.
Yeah.
No, I have kept that in mind since my soybean trade, actually.
But we just need to keep tabs with it. As with last week, we need to see exactly what happens, where we are on the US close on Monday. And but in pure technical terms, there is certainly no reason to sell this IAG, at this stage. And there's no reason to sell the Nasdaq at this stage. So until we get more data under our belts, we can't do anything. In the meantime, let's have a quick look at one other thing I wanted to show you. Let's look at China. I mean, to me, these guys were the first major economy out of the virus. So that's not even a trend line. Let me get rid of that. So at the moment,
where we were last Sunday when we talked about this, we were at the bottom under that fib, weren't we, on the 13233 fib? Look where it went. Whoa.
Yeah. So they had a massive Monday.
And a massive Tuesday.
Yeah, well, yeah, they had a massive week, full stop.
Yeah.
But there's the little apex, and on Monday we popped out of it. So that's got higher to go.
So what stocks are carrying that, Mike? Do you know what sectors are carrying the Chinese aggregate market?
I think the reports are coming out of near normal car sales, near normal consumption in oil. You get a near normality. Yeah, their factories went back to work. I can't remember the date now, but I would guess they went back to work at least early May, if not early April. So if China can hold up, then why can't the US hold up? I'm arguing technically, not emotionally or rationally. If we can see,
but China's how the difference is China is coming up to a far. I mean, it's nowhere near to its peak, is it?
No.
Whereas the US is at a peak, it's an all-time high. I think that's the difference. You know, there's far more logic to say you could buy into China or into Germany or even into British Airways, but to actually buy into something that is at its all-time high in this world just doesn't seem to be logical at all.
No.
And you're struggling to find things to buy.
Yeah. Because if we look at the one sector I do like, and I think this is a really good sector, and I'll show you a couple of stocks I'm interested in. The healthcare sector has been really quiet and lagging while all this Nasdaq and tech stocks have been going crazy. So I'm going to start getting back into the healthcare sector. Because if you look at tech, BMY is one, ABV is another one I like. And Abbott, yeah. I like to look at some of these healthcare sectors. They're not going crazy. They're quite stable stocks. So I'm just buying dips in some of these healthcare stocks if they can sustain these levels. So that's back in the apex. So I'd be interested in buying. I'm going to buy something like $88. Stop under 87. See if that can. I want that to close above 91. If that can close above 91, that could go back to the highs and more. Medtronic. Been talking about Medtronic for a while. That's had a nice pop, but it's nowhere near the giddy heights of some of the tech stocks. What's my other one? CVS. That's a bit high for me. CNC. So
one to watch is Gilead, because Gilead's about to have a takeover by GlaxoSmith. Is that no AstraZeneca?
Right.
AstraZeneca's offered to buy them, so I think that they're going to go mad tomorrow because their stocks, their price is awful.
Yeah, again, lovely chart pattern. I was talking about this all last summer. I was in and out of this all last summer because of this chart pattern. And it's still, although it's been a little bit ragged, I just do not like ragged stocks. But there's just so much news going in and out of this. But yeah, that's a potential bull flag. There's the mast.
But I think it's only just been announced this weekend.
Right,
yeah.
Okay.
So I think
it's had a good couple of days, Wednesday, Thursday. And that's the most recent range. Yeah, so look, at the lower zone has held at 72.32. So forget, maybe it's going to blow up, we don't know. So we held the 50%. But we're under a trend line. But certainly the fact that 72.32 held was interesting last week. Actually, that's a couple of weeks ago, isn't it? Yeah, back into May. It's a ragged chart, so that's why I left it. But it was sweet here. Yeah, this is what the grains are potentially doing, shuffling around, but potentially going to break out. Lovely chart. Okay, let's just move on and just quickly look at a couple of things I'm looking at. If you're looking at anything, let me know. But otherwise, I'm just going to quickly rattle through what I'm seeing in these charts. Yeah, of all the grains and ags, wheat is the most pathetic at the moment. But I'm sticking with it because we did break out. So if we can, as long as we don't close underneath 510, I still think that's going back to 580 plus, 550 plus, and ultimately back up to 6. Because if you just, well, let's look at the weekly rather than squeeze the daily. There's my weekly chart. So as long as we can hold that and sit above that structure, I think that's got legs. Sugar's gone crazy. Oh, it's got, well, I say crazy, it's had a decent run. A lot of beans are doing a lot better. They're out of the apex and sitting high, so 850 is now buying beans. Coffee Arabica is on the weekly, has had a higher close. I had alarm set for 95.10, it's not triggered. Might still do it. That decent volume came in last week. Significant higher volume on a smaller bar. So let's flick to the daily. Yeah, the jury's still out, but I'm certainly I'll see where we are on Monday on that one. That's a bit of a feeble, there's no significant buy signal. We didn't engulf. When we closed higher on Monday the 1st, we didn't engulf. So that's still potentially a bearish consolidation until we close above this fib level. So I will potentially start to nibble lower if we can get it. But some of these commodities are doing really well. Look at cotton. Look at rough rice. Had a good time until Friday. Lumber. Commodities are good. This weak dollar should have these grains higher, but they're not pushing higher. So I'm still tentatively dipping in and out of these commodities. Talking of which, let's look at metals. Gold obviously looks lower, having come out of that flag pattern. So I'm not touching gold at the moment. I traded it 3 times. I got a $15 run, 15 to, or probably close to $20 run on Thursday, but just ditched it because I wasn't happy with it. So took a $15 move and left it out of across 3 trades. That was. Oil, yeah. Interesting. It's not backfilled. At 41. Yeah, with all the goings on in the Nasdaq, and with yeah, you would have thought that would have backfilled by now. So I'm a bit suspicious of oil, the fact that it's not.
OPEC's just agreed to continue supply cuts, haven't they? So
I read that. I think they just agreed today, didn't they?
Yes, it should. It always takes them a while, doesn't it?
So I did really well on this. This really topped up my futures account on Thursday, Friday. Not traded that enough recently, but okay. If it gaps up, then I'll just try and buy a gap fill. But otherwise, I would still be interested in pullback to 35, 36 if it lets me. So metals have had it. Gas. Again, gas had a good day. Wednesday, Thursday was good. I'm just taking my time with gas. I think yeah, obviously it's just coming into peak summer, so I'm not in a hurry to start buying that. But I do think end of the year, I do think we'll see some much higher numbers in gas. I think that's a bit like if you think of Gilead last year, where Gilead was just getting bought at the base. I think I'll just start to buy when we get some decent dips on that one. So I've got an alert set for 1735. I would like to see that come down to that level before I start nibbling on any decent level. At the moment, I'm just, if I see a good squeeze in a day trade, I'll take it. Otherwise, I'm not sitting in that. What else? Stocks I've talked about briefly. I'm interested in the healthcare sector. I've got some shorts on the UK. I want to show you some shorts because I just, yeah, I just don't trust this market. So I've been scanning for shorts today, and I came across this. Games Workshop. Why am I interested in this? Because we came up to a new high on the 29th. Didn't engulf on the 1st, but certainly we're really struggling up here. So I'm tempted to try and get short on this one. Anything into that 780 level, because I just think this tumbled nicely. Is that an extension up there? No. I think at the very least that deserves to come back to 73, 78. Interesting. Look at the volume on the selling on Thursday. That is too toppy for me, and I think I'm going to short that. Let's look at DOM. Going on about DOM for ages. DOM is really interesting because it's such a good. It's such a good seasonal stock. This one, it's reliable on these seasons. If you look at these pink zones, these are June of 2019 and 2018. So this recent high has only just peaked above the gap fill on 2018, and every time it sells in June, it sells really well. Funnel pattern. Funnel pattern. And guess what? Funnel pattern. Being a bear raider is fun. I like being a bear raider. Because in June 18, this tumbled from 360 to 208. This one tumbled from 266 to 215, or no, 210. That's falling out the sky potentially. 356 is still a short area. Stop above 373. Not risking that much money. You short that. You're risking that much for that potential reward down to 277. Very decent, very handsome risk-reward ratio. Other shorts. Can't remember what RMV stands for. Let's have a look. Oh, right move. Should know what that stood for, shouldn't I? Failed to get to 626. Sell signal on Thursday. Still very weak on Friday. So that's shortable at any attempt to get back into 6 for at least a potential move down to 538. But I've got some buys as well. Jets. Oh, this is Just Eat, isn't it? I hate Just Eat. All these bloody mopeds flying around like crazy, polluting the environment. Why don't people just walk? If they want a takeaway, why don't they walk and get one?
They use bicycles, Mike.
Do they? Okay. Don't ruin my story. I'm having fun moaning at them. I thought they had motorbikes and mopeds and stuff. Am I
I
thinking?
think some of them do, but there are a lot of bikes though.
You're spoiling my fun. That's a potential short on, was that Wednesday? Thursday's low. I'll show you my longs in a minute. ITV. I've been banging on about ITV in the past. Now, that is a potential pin bar sell at the end of this little run. Again, I'd much rather it sat a little higher, but it's still sitting quite, that's quite a good example. You know, I was looking for a good example. I knew there was one, but I couldn't find it when I needed it. So if that closes below 87, that's toast. Yeah, that's a good benchmark. That's got to close under 87. Still shortable into 89.90. And I like the pattern. Let's just have a look at, we haven't talked about Elliott wave for a few moments. Let's go over Elliott wave. Wow, it's hardly pulled back when it dropped, did it? Where am I going to go? 1, 2, 3, 4, 5. 1, 2, 3. 1, 2, 3, 4, 5. 1, 2, 3. End of a, yeah, potential C wave. End of C wave. Wow. End of C wave with a sell signal. What more could you ask? But you know you're going to be wrong if that closes above 90, 91. I'll get out and stay out if that closes, well, short term, if that closes above 91. Right, I'm nearly finished. Right, onto UK bull charts. Saga. Not great. Let me revise this thought. Yeah, I can't even close above a fib zone. The lowest fib zone. That is not healthy. If I was going to buy it, I would look at 21. Let me see, I'm going to alarm that and see if it's going to come down to 21, and then I'll revisit it. So I'm going to just keep that on the watch list for now. Oh, Octopus, yeah, Octopus. Fairly thinly traded stock. Sitting quite high. No, I'm not going to trade that. Auto trader, okay. Anybody else look at any stocks? I can't spell auto trader. Ooh, that's good. That's a higher probability short to me. If you get the chance to offer out a 560 with a stop above 580, yeah, that's thank you for that. That's on my list. In fact, that's going quite high up my list. Ted Baker, right. Well, that volume, and it's hardly shifted. Wow. This is what I was hoping for next. I thought next would go deteriorate a lot quicker.
Right, there's a story about Ted Baker.
Go on.
That the Ted Baker founder cut stake by 55% in emergency funding bid.
Right.
On the 1st of June. The Ted Baker founder, Ray Calvin, has slashed his stake in the fashion retailer by more than half, handing control of the company to an investor known as the Rottweiler. In an emergency 105 million funding to get the business through the coronavirus pandemic. So I think that's why they're really, really struggling. I think it might not, it might be heading for the trash can.
Yeah, it's sort of. I'm not in the. I am not buying anything in this sector, so I certainly wouldn't buy it. Full stop. And it's had such a horrendous tumble. Wow, that's just that really has fallen out of the sky, hasn't it? This is a good example of if you get a gap down. This is what you do with a gap down. You range it. Could be earnings, could be a news story, could be anything. But if you get a gap down, range it, because if that pops, when that popped back in the range on the 19th of September, that was a potential candidate for a drop. So we close under the trend line. Well, we close under at the 25th September. An attempt to get back into that range at 976 failed. Yeah, hindsight's a wonderful thing, but there was definitely some signals there. That's not for me.
Mike, when you go on, can you just give us the stop and the target for Auto Trader?
Yeah. So I'm looking to offer out short at 560 with a stop above 580 and a target of 450.
Okay.
Lower if it closes lower. Let's have a look at next. I've talked about next. Let's have a look at it. Yeah, hesitant. Very hesitant. I've had a few stabs at this short. Done well.
I think though Next has got, I think 2/3 of its business is online now.
Yeah.
And I think that they have not had a bad run through the COVID. They've got a very loyal customer base. I think that the thing is that there's so many brands have gone or are going.
Yeah.
And I think that, for example, Warehouse is a big competitor of theirs.
It's a good brand. It's a good company. There's no sell signal anyway.
Can I just ask? There's one Japanese and one American company that sell these all over bodysuits that allow you to size yourself for online clothes. And their stock, the Japanese stock collapsed, but I don't remember the name of it. Does anyone remember the name of it?
I don't know. I'm not aware of that. No.
Well, there was one that Primark, is it Primark or somebody was going to do, or was it ASOS that you could actually, you put something on. Is that what you're talking about, Wellington? You put something on, and then you whatever you could see on the website, you could just show it on you. Is that what it was? It's like like a green screen.
Oh, it's like a bit like a green screen, yeah.
Yeah.
Yeah, exactly. And then you can size yourself according, and that company went through the roof in Japan. I read about it maybe a year ago, and then it collapsed. But I can't remember the name of it, and I think there's an equivalent to it in the US, but again, I don't remember the name of it.
Interesting. Just looking at chart patterns. Look at Associated British Foods here on the 11th of October.
They own Primark, don't they?
Yeah, down channel, massive buy signal on the 11th of October, huge engulfing bar, consolidates until the 25th of October, and then wham, up she goes. Let's look at that on a fib level.
But it actually came down.
Oh yeah, but I'm just yeah, we'll come to that in a minute. Hang on.
I think, I mean, my sense of UK retail is I believe that the whole nature of shopping was changing before because we were going more online. I think that when they actually do reopen the shops and they've got to do all these social distancing things, I think that they will be quite surprised how many people just don't want to go shopping because the whole experience.
Yeah.
John Lewis said before the COVID, John Lewis said shopping has got to be theatre. It's got to be the whole retail experience. People meet up, do a bit of shopping, go out for lunch. It's a day out. I think the minute that you start having to queue up outside, you can't have anything to eat. There's no toilets. I think a lot of people just aren't going to go shopping.
Well, a couple of things for me. When Apple opened their first shop, I thought that's it. I thought everyone would follow that model when they started opening their first shop.
Yeah.
And I was amazed that hardly any other retailer seemed to copy that. The second thing that surprises me about town centres now is I cannot believe how much time and how much money people spend on coffees.
Yeah, it's crazy.
I think it's absolutely nuts. I think the price of the coffee is ridiculous, and it's a huge problem for the environment with bloody cups everywhere.
Yeah, but also, Mike, another thing though is that we've all, firstly, not so many people. A lot of that coffee drinking is people going to work, isn't it? Grabbing a coffee in, or having meetings and working in coffee shops. You know, because you haven't got a meeting room in a busy building, so you go out for a coffee or whatever. I think.
Yeah, I've done that a lot, but yeah.
I think they are really going to. I think you're going to see a completely different, a very fundamental difference in shopping, and I begin to wonder whether the shops are going to be as busy when they come back. So I think that some of these are great candidates short.
Can I just say, just on the Apple's different because it controls the entire supply chain. No other companies do that.
Yeah.
But the other one I wanted to look at was McDonald's, because I drove past McDonald's on the way from work.
Don't get me on McDonald's.
There were cars all the way back a mile waiting to go to the garden. I just couldn't believe it.
Is horrible. Why do people buy McDonald's?
It is terrible because the Burger King store was empty as usual.
It's an old friend, isn't it? They, not to me, I never eat it, but I'm just saying to the people that
a bit like a pair of slippers.
Yeah.
It tastes like them as well.
Yeah, it does. But the thing is, it's like it's like an old friend to them. But I think that there's obviously a reason they got so many branches.
Yeah.
But
as Mazine says, it's drive-through, isn't it? Yeah.
But I think these bricks and mortar retailers may well find that actually there has been a fundamental. It's a bit like commercial property, isn't it?
It's like JCPenney. They're in JCPenney. I remember that stock from years ago. 10, 15 years ago. JCPenney have got Chapter 11. Oh well, they just bounced anyway. They used to be, they were a huge stock. You look at their weekly. This is why I started shorting bricks and mortar, because JCPenney was a $85 stock not that long. Oh, back in 07. It's been on a steep decline, but this is the one I used to short. I started shorting on bricks and mortar. This is what really got me going on bear raving on retailers. Look at this fab chart. Look how it punches higher in July 15, and yet that was just this is what I meant to talk to you about on indices. This is like an exhaustion move to me. This could be what we're seeing on the indices. It's a lot of red on that chart, really struggling. So they chuck all the weak hands out. It's called pump and dump. The US love pump and dump. There are traders who day trade on pump and dump in stocks. Well, they find a stock, they look at the unusual volume, they see it pumped up, and they short the heck out of it. This is what they've done on this. It was a dodgy stock having a lot of problems. They take it up in the top of that channel, it immediately starts selling, And then on the 10th of August 15, they come out of that funnel. And this is potentially the same pattern you could see on a lot of those shorts I've been talking about on Games Workshop, Rightmove, Just Eat. You know, they could all start coming out of these funnels, and even as recently as 18 and even into last year, this was still shorting out of nice funnel patterns. So that you know, could be seeing an exhaustion move in these indices.
But if you look at the end of that, I mean, I bet you that the last, you looking at a weekly there, aren't you? Yeah.
Yeah.
But if you look at the last bar of that, I bet that all happened on Friday. Yeah, look.
Yeah.
And immediately short it. What does that mean on Friday? Oh, it opened higher and closed lower.
Yeah. Right.
So it doesn't run all week. Okay.
Time to go. Time to enjoy at least what's left of the weekend.
Thank you, Mike.
So have fun, everybody, and
see you on Wednesday.
See you on Wednesday. And Mazine, I've got a whole load of stuff to send to you. I've worked on it all weekend. I'll finish it off in the morning, and then I'll get it straight off to you, and then we can get together and go through it. All right, thanks everybody, and stay safe and see you then. Bye.
Bye, Mike.